Euro versus the Aussie could be on the point of a significant break higher. We're already strong. We're already in a decent bull trend. On this monthly chart, you can actually see we've been in a decent bull trend for over a year and a half. But now if we break above the 2015 high at 163.23, well, we are breaking above it already. We did reject it last month. We came back down, but no follow through in this month. Already a big blue candle looking very strong. So if we get up through 163.50, there's really no stopping this market. It looks pretty positive on the monthly chart, weekly chart. Well, it's just closing in on, but you can see we've seen the strongest weekly close for a long time, so that looks pretty good. Daily chart, I don't think it's going to tell us anything new. No, not really. Well, actually, if we don't break high, we have got a double top, so we're at a critical point, as you can see. But it won't take much to push us up through 163.60, and that should start a new leg higher, triggering all sorts of stops as well who are betting on the double top. But just be aware that there is that double top potential. Short-term charts are a mess. Euro versus the dollar has been such a puzzle. Right, where do I start? Well, as you know, I've got a bias for the dollar to weaken, and this chart does really back up the fact that the dollar can weaken. So, monthly chart here, as you can see, we've got some good support around the mid 114 area. You know about this, I've been waffling on about that all of last week. When you look at it on a weekly chart, we've got the 100-week moving average, which did hold last week, even though we spiked below it. We closed above it at 115.00. We closed above it at 115.23. So that's worked well as support. We've got that little trend line here, not particularly relevant, but I'll take it off. But and we held this trend line going back to the beginning of 2017. So there are some weak arguments for a stronger euro versus the dollar. We blipped below the 61.8 at 114.95, which, as you know, was my buying opportunity, and we got stopped out, which was frustrating. It looks like a lot of people got stopped out on that, and then we turned around and gone higher. So maybe that was the spoof before the rally as well. The fact that we closed above this little trend line here, which is at 115.12, and the 500-day moving average at 149 at 114.97, and the 61.8 at 114.95, to me looks quite good, and we're above these lows, aren't we? Yes, 115.06, 115.07. So if you put a gun to my head and told me to buy or sell it, I would buy it, but I can't say that this is the most exciting chart. Gold, you know what I'm going to say. Long-term trend line, resistance at 12.11, 12.12. We've been hovering below it, but we refuse to move away from it. I don't need to show you, as you remember from all videos recently, but there it is. The 13-year trend line at 12.11. So, not 12.17. Right. If we break above 12.12, this should go to the moon, because we've got all this build up below here. So there'll be a lot of stops just above 12.12, and then we should be racing up to the low 12.30 area in gold. I've got a feeling it's going to happen, but there's no point in buying it now in the hope that it will. Obviously, that would just be way too risky. WTI crude. Now, I wonder if we're building a head and shoulders pattern here, but we'll worry about that later. Trading nicely in between the 100 and 200 hour moving averages. So I think I talked about that on Friday, in the video on Friday, but it's clearly working. So just trading in between those two levels, as long as it holds, I guess. There's a decent 140 pips odd in that trade, in that scalp. Now, good support, 74.00 down to 73.80, as you can see, from the 200-day moving average. And so a break below 73.80, maybe give it 10 ticks, 73.70 should send us down to 73.00, 72.95, and then we start to hit some support from 72.80 down, well, really all the way down to 72.14. Actually, you can see that just this congestion, but you might be able to nick. You might be able to nick 70 odd ticks on the move down to 73.00. Certainly, if we break lower, if we break out of this scalping range. I'll finish off with the E-mini S&P. So we've got a trend line going back to the beginning of the second quarter 2016. So it's about, what, 2.5 years old. I should have spotted this trend line a while ago. I've only just put it on there. So it's a bit frustrating because I should have been alerted to a potential top here. Anyway, we've seen the top, and we have reversed over the past week. Very overbought in the weekly chart, but that doesn't really make a huge difference in a strong bull trend like this. However, okay, so we've seen a little correction from 29.44 down as far as 28.73 on Friday. Now I don't think I had that as a level. I've got to check the report, but I definitely had the 28.86 area as support, which worked the day before, but didn't work Friday. We actually headed lower, to the trend line, which is going back to May. 1, 2, 3, 4, 5-month-old trend line. 55-day moving average. Well, that did hold, and we rocketed back up again. But I've got a feeling you want to short this. I was actually shorting it to around 29.0708 on Friday, and then got stopped just before the move lower. So that was very frustrating. But you can see that that should still be good resistance, and it certainly worked on the way down. And it is a fib level, and it is these little swing lows there. So see what happens. Clearly the 28.85, 28.80 area is going to be important. A break below 28.75 can take us down maybe as far as 28.50, 28.52, 28.48. And that should be a really nice buying opportunity in the S&P. That should take us as far as an oversold area on the slow stochastic, and the 100-day moving average, well, probably won't be quite there, but it'll act. We can use that to work out where our stop should be, should we get down that far.